All right, we're going to go ahead and get started with the next session. I feel sorry for the last session. They're between y'all and lunch, so at least we're next to last before lunch. But glad to see you all networking. That's the most important thing you'll do here today is talk to your other business owners, potential business owners, and resource partners in the room. So I hate to end that, but we'll get started with this. Probably the most important thing when you're starting a business, we'll cover today, the funding and finance or access to capital is what I like to say. I'm Matt. I'm with the United States Small Business Administration, West Texas District Office. What that means is we are a federal agency. We're not an association. We're not a group. We are a federal agency funded by federal taxpayer dollars. We cover 71 counties. We cover from here all the way to Oklahoma, over to New Mexico, all the way down to Taylor County and over to Monaghan. So we have the Permian up to the Panhandle, Big Sky Country, Caprock, and everything in between. What we do is we help small businesses start, grow, expand. We're always saying, of course, and you've heard it, you can't say enough, small business owners are the backbone of the country. They're the backbone of Texas. They're the backbone of your small community for sure. You're employing most of the people. You are paying the tax dollars for the community. You're building the schools. You're building the highways for the state of Texas. So we appreciate that. We appreciate looking in the room. Sometimes the groups are smaller, but this is a great group. And it's a great day to be in Pampa, Texas with this audience we have. I know some of you are potential small business owners I've talked to. Some of you are existing small businesses. So we hope to have a little bit of information for all of you. And I have 19 years at the SBA, so I thought I was really somebody. And then I talked to Clyde Jenkins over at the USDA today, and he's got 42 years now, 41 years, Clyde Jenkins over there. So I say that because he's another federal agency. Clyde was here long before I ever came out to West Texas. And anything rural development, well, they always say we're a hidden secret, but I say they're even more of a hidden secret. And if you ever have the privilege or access to work with rural development, the program is probably one of the best funding programs for businesses there is out there. And we'll get into a little bit of the different programs. I have a great panel that's very much more experienced than I am as well. We have Kim Hill, Kevin Hunt, and I tried to practice all these names beforehand. I did, kid. And Spencer McElhannon. All right. And I have a little information about them, but I'm gonna let Kim start off and introduce herself.
Okay. Well, my name is Kim Hill, and I'm the market president with First Bank Southwest here in Pampa. I've been with First Bank Southwest for 44 years, and I've served as the president since 2012. And I do commercial loans, commercial real estate loans. I've done all types of real estate, consumer loans. The majority of my career has been spent in the lending function, and it's a passion of mine to help people both in their business or their personal lives. And it's fun to watch something start and grow and succeed. So it's a pleasure to be able to provide those services.
My name is Kevin Hunt, and I have been a banker here in Pampa for about 25 years. I didn't start at First Bank Southwest, but I got here as quick as I could. So I've been here for about a year and a half at First Bank Southwest. Previously, I was at AIM Bank and First Bank and Trust, NBC, for about 22 years. So it's been a great time at First Bank Southwest. We have so many great small businesses that bank with us. As we've said, it's the backbone of our community, and that's, we really love small business lending and small business customers. So we're excited to be here today. So thank you all for being here.
My name's Spencer McElhannon. I am one of the owners of a company called Leading Edge. You'll notice that it looks like we misspelled the word EDGE, but that's an acronym for Entrepreneur Development Group. We provide counseling, consulting, coaching services to economic development corporations in the Panhandle and the South Plains. I personally handle most of the communities that we serve in the eastern and northern part of the Panhandle, which includes Pampa, Dumas, Borger, Perryton, Wheeler, Spearman, and Canyon. Our primary role is to come into the community. The EDC pays our fees and provides services to the local community at no cost to you. We help people who want to start a business, people who have an existing business and are struggling with something, trying to grow it, doing something of that nature, or people who want to buy or sell a small business. I've been a small business owner since I was in my early 20s. You can tell that that's been quite a few years ago. I have lost most of my hair as a result of that, but I love what I do. I like to help people in the community who have issues or people who are excited about something, want to get a business started. We do not, as Leading Edge, facilitate any kind of lending directly, but we do support the local banks, commercial bankers particularly in each of the communities we work in, and I've worked with Kim and Kevin very closely in the past with clients of theirs.
Thank you, Spencer. I know this is finance and funding, but I'm just going to start off with a simple question because we start off with a lot of startups, and startups sometimes get started before y'all even know you're starting a business, right? Like you come up with the idea and you hit the ground running and you pull money out of your personal checking account, and you know, next thing you know, you're paying bills, and you not really keeping track, and then move along, and maybe you're ready to get financing to get started. Over at First Southwest Bank, could you just tell the importance of even when you're getting started small, to opening maybe a commercial or checking account, just to make sure you know your funds are being properly managed there and not mingled with your personal accounts? And so maybe one of y'all want to talk about the importance of opening a business checking account.
Yeah, you know, I would say that one of the most important things that you need to think about when you're getting ready to start a business, you're trying to pull things together, know where you're at, and as you open your business and you continue on, one of the biggest things you have to do is keep track of your finances. You need a good accounting system, whether it's QuickBooks or something else. You need that desperately. You know, one of the things that we have to have is to look at your financial plan when we're looking at a potential loan for your business.
Yeah, and I expand on that a little bit too, and just say that, you know, we're relationship bankers, right? We don't want just a piece of your business. We don't want just your lending side or your deposit side. We want the entire relationship. It helps us as we move forward, as you grow. It helps us to grow with you if we have that deposit relationship, you know, as Matthew said. So that's a very important piece of the puzzle too.
And just to piggyback on that, let's say you call me at the Small Business Administration and you're saying, we're looking to start a business, or we have an existing business and we want to expand and purchase a new item for our business, and we're looking to get SBA lending. Well, just to let you know, SBA is not a direct lender, right? If you call us, I'm not going to take your application. I'm not going to approve your loan. I'm not going to fund your loan. That's not what we do. We work with our participating lenders. We work with most of the lenders here in Texas if they want to work with us, and we participate with them. And so first question I'm always going to ask you is, who do you bank with? Personally or as a business owner, because we're going to send you back to them because they understand you, they understand your business, they understand your needs, they understand what you're capable of financially. And so that doesn't always work for whatever reason. Certain banks don't want to do certain loans to certain industries because maybe they have one. Just an example, I was in Wyoming at the SBA for a while, and this bank kept saying no to somebody who wanted to open a coffee shop. And they came into us and they said, why are they saying no to us? Well, I called the banker up and had a conversation with her. Well, we fund the coffee shop across the street. And you're like, oh, so yeah. So they ended up opening the coffee shop at another bank, which was perfectly fine. Everybody was good with it, but it's just things like that. And when someone comes in to visit you, Kim, and they're talking about starting a business, what would you ask for? Looking for a loan for a commercial loan, what are some of the items you would look for?
So when we begin the application process, we want to see your financial situation. So, for instance, if you're opening a business and you're going to be an LLC or a sole proprietorship or a corporation, we want to see your personal stuff as well. So we're going to want a personal financial statements that shows your assets and liabilities. And you know, looking for, you know, what kind of assets do you have to put into it. We want to see tax returns, you know, a couple of years of tax returns, and then a business plan.
That's good. We're gonna jump down to Spencer on that business plan. So if let's say I'm sitting at home and I you know, I wrote out my business plan, Mad Jock coffee shop, you know, Pampa, Texas, and it looks good, and I walk in, and Kim says, oh, that's a nice business plan. You might want to work on that. Where could you help them, Spencer? What can they do?
Well, one of the things that we've been here long enough in the community that if you wind up in Kim or Kevin's office and you haven't done any work on that, they'll probably refer you to me. But when you come sit down with us, whether it's me or one of the other facilitators in another community, we'll just kind of walk through your whole business idea with you. We have a set of tools that we use that help us build financial performance that can show the bank your cash needs, both from a term lending perspective as well as lines of credit for operating capital and that kind of thing. And we'll just kind of walk through that with you. Everybody's in a little bit different spot. People come with business ideas, and sometimes it's, I had a dream last night about starting a business and they show up. That's fine. I've been working on this for 20 years as I worked at the plant. Now I'm not working at the plant anymore, but I want to start a business. So wherever you are, it doesn't really matter, but we will sit down with you, kind of walk you through the process, help you put together the financial documents that you need to kind of help describe to the bankers the cash needs you're going to have, what your expected revenues are in the first, second, and third year. And then you can take that both to the bankers, but also if you're going to raise capital from investors or friends, family, that kind of thing, it's a really good tool to help you describe what you're doing and what you need.
And just to piggyback on that, if you have an existing business and you decide, maybe you've never had a financing before, but now you're looking to get financing, would you also say it's important for them to have a business, to update their business plan or create one?
Absolutely.
As well?
I mean, I think it's always a good idea to sit down. I mean, we, as entrepreneurs and having been one myself for 40 years, you've got ideas in your head, and even if you've had lots of experience, it's really important, I think, to sit down and kind of work through the numbers and get a real good handle on what you might expect given a certain set of assumptions, and we can help you do that. And a second set of eyes and ears and experiences that kind of just help you work through that. We deal with people who, like I said, who have absolutely no experience whatsoever, and people who are very sophisticated. So I would encourage you, regardless of what community you're in. There's many that I serve here directly, but we have counselors, consultants all over the Panhandle. So if you have an interest in getting something started, come see me.
And something else to jump on that, we always say shop small, eat small, and we use small business owners. But I'm going to encourage you all to think small as well. Your Chamber of Commerce and economic development corporations in your local small communities is a great place to start. Think there. You get online, you want to Google, and you're going to get information from all over the world that's going to suggest on how to start a business, how to grow your business. But I promise you, no one knows how better to operate a Texas and West Texas than your resources here in West Texas. So don't think that you can't go see them, you can't visit with them. Spencer and his group is confidential. When you go in there, everything that you talk about with them about starting or your business, you may have been operating a business for 10 years, but now you've ran into a situation where you want to grow and you want to talk it out with somebody, feel free to reach out to a local resource partner. Call me. I'm housed out of Lubbock, but like I said, I'm probably gonna come back to. I'm gonna start with, have you used any of your local resources first? Now, we all have other resources that we don't mind referring to other people and other things, but think small when you're doing that. And just to clarify earlier, I said if you call the SBA about an SBA loan, I'm not just gonna be cold and say, no, you can't get an SBA loan. We just don't take that application here. We're gonna talk to you about banks, what banks are looking for, what maybe lenders you should work with. And we're going to talk a little bit about 504, 7A, and micro lenders. That's our biggest loan programs. So we're not a direct lender, but what we do is we're a guaranteed loan protector. So let's say you come in to visit them and you talk about getting a 7A loan, and you present your business plan down there. You've worked with Spencer and you've came up with projections and financials and all those things, and you come talk with them. You may not even at first understand that it's an SBA loan because you're going to be working with the bank. But they'll present that over to the SBA, and we'll present a guarantee to a percentage, 75, 85% of the loan. And so in doing that, maybe you want to talk a little bit about the 7A program and kind of how it works, or?
Yeah, we've done some 7A lending in the past, a little bit, not a lot. It's a little bit of a complicated process. There's a lot of paperwork, right? It's through the SBA, but. So banks basically, we take all of your information, we compile it into a loan package of some sort. We would take that directly to the SBA. and asked them if they were interested in partnering on this project. And if they were, then they would provide, like Matthew said, some type of a guarantee to the bank, a percentage of that, 75% up to a max of 85, I think. Matthew, is that right?
That's correct. Up to 85% if you're doing international trade, 90, 95, but it's around 75, 80%, depending on the risk of the business. So, different things vary. And we'll talk some about it. Cash flow lending, that's what we're looking for, and that's kind of where you'll see an SBA guarantee come in more, is cash flow lending. So when you buy your house, you're buying a house based on what? Collateral. Your house is there, and they can, if you don't pay for the loan, the bank can take the land, the actual structure, and pay it back. Let's say let's think of a business let's do the coffee shop. Let's just stick with coffee this morning since it's early. Let's say you want to open a coffee shop and you want to borrow $250,000. The space, you don't own the space. You're going to lease it from a shopping center out here. And you're going to borrow $250,000. You're going to change it out, decor, seats, machinery and equipment, everything you're going to need to operate a coffee shop. Well, if you go to the bank and you're going to ask for a loan for that, they're going to if this goes bad, what's guaranteeing we're going to get paid back? So they have a board of directors, they have bank people that have invested money into the bank. So they got to think from that aspect, what's going to guarantee we loan out this money that we're going to get it back. And so let's say the coffee shop goes bad for whatever reason. And so they have to liquidate assets. What do you have to liquidate there, right? You go into a coffee shop, you're going to talk about 10, 20%. You're going to get return on what you've invested into that. Leasehold improvements. You've improved somebody else's property. That's not worth anything. You can't take that with you. But what our 7A program will allow you to do, if it makes sense cash flow, they're going to say, listen, this business each month makes X, Y number of dollars, right? And they're able to pay back, $2,000 a month to the bank. SBA says, listen, cash flow wise, that makes sense. We'll go ahead and put the guarantee on there for 75%. So if everything goes bad, if that, we'll say $200,000, I can do the math better. We'll come back and minus whatever assets it's still going to be a regular loan to you. You would still have to repay back the full amount, unfortunately. And so only the bank would be covered for whatever they couldn't after liquidating assets, like a standard loan and everything else. We would come back and say, okay, you were short, $100,000. We're able to provide that money to you. Now, what he's saying is they don't do a lot of SBA lending or 7A sides because in that process, we do make sure everybody crosses their T, does their I's before we'll do that guarantee. So they are kind of stringent on the front end, wanting a good business plan, a good cash flow. We're going to look at personal assets to make sure your personal assets are in line. Because what's the first thing you're going to do when your personal assets aren't good? You're going to start pulling money from a business. And so that's why it matters what your personal assets look like. I know I've rambled on, but I'm going to do a pitch here. This is also what we do. We do business with the banks as well. So right now, our 7A program up to $1 million, we've waived the creation fees to the borrower and to the banks. So generally, we charge the bank a fee when they do a servicing fee with the SBA loan. Right now, they're waived. If you borrow up to $1 million, they don't pay any fees, which means they make more money on the loan, and then you don't pay any fees, which means you won't be financing or out of pocket near as much money. I'm going to pop in a question right now talking about equity injection. Somebody comes in to do a startup or an existing business, what are you going to look for from them when you start it?
Obviously we do want equity in it, and depending upon what it is, if it's real estate, we're going to want 20 to 25% down. But otherwise, if it's, to purchase equipment and things like that, we may ask for more like 30 to 40% down.
And just to back that up, so once again, I'm SBA, so I'm going to be pro SBA lending all the time. And why to work with an SBA program? We try to do longer terms normally than a traditional loan. And then also what we're going to do is we'll take a less equity injection sometimes than that. We'll do, for instance, if you want to build a structure, we'll talk a little bit about the 504 program. 504 versus 7A. 7A, we talked about leasehold improvements, machinery and equipment, lines of credit, all those kind of things. We're going to look at a 7A. If you want to jot that down or Google it. 504 is the program if you want to buy an existing structure, building a structure or a fixed asset, a large fixed piece of machinery equipment. Let's say you're in manufacturing and you need to buy a $1 million piece of equipment that kicks out widgets. That's something else in the 504 program. So let's say you already own a building, you want to put that asset in there, and you can't find traditional lending because that widget machine, right? That widget machine is not going to do the bank any good if they had to go collect on it, right? Who wants this widget machine besides you? But it cost $1 million. So let's say somebody had to come get it. It's worth nothing to most people. So that being said, you go to the 504 program and we're saying, listen, this thing's going to make money. It's going to pay us back. We're going to allow you to do that $1 million, but we'll do that with a 10% equity injection. So if you already own the building, you already own real estate, you've already owned other pieces of equipment in there, you may get that piece of equipment without out of pocket of any kind of money. So that's some advantage to that. So just remember things like that. 504, anybody want to say anything about it? That's probably what I'd say the best. I say it's the best lending program we have out there.
Yeah, it is. I'm working on one right now, as a matter of
There you go.
fact. So, it's a great program for the banks. It requires, like you said, less of an equity injection from the borrower. I won't get into any specifics on this deal, but, the bank basically loans 50% of the project. We find a certified development company such as the TPRDC over in Amarillo. They handle like 35 to 40% of that project, so it's actually two loans. The bank takes 50%, the TPRDC takes 35 to 40% of that deal, and then you'd be required to put your 10 or 15% equity into the project. So for the bank, it's a wonderful project because we only have 50%, of the cost of this deal. And then SBA guarantees, I guess, to the TPRDC, the other 35% of that deal. So, sorry, my voice is leaving.
Well, and also the great thing to Kevin and First Southwest, they're in first position.
Yes.
So they're 50%. So their first position, we take that back end position on 35%. So they're real excited sometimes to do a 504 loan because they're in a great position. First of all, you got a building or a fixed asset, which is something we hardly ever see in commercial lending. When we see that, we get excited. There's actual piece of collateral, especially if it's a building of some sort. Yeah. If you're looking to do a building, and I tell you where it really comes into play when you're doing a structure that's special purpose. Hotels, hotel. Once again, who can buy a hotel besides somebody else that's going to run a hotel? So those things are kind of risky in a way, right? You got to show how it cash flows once again, but you're buying an asset. Car washes is another thing. That's a structure or a piece of machinery or equipment that's special purpose. And so you're not, most of the time, or I would say all the time, you're not going to be able to go to traditional lending to buy or purchase something like that. And so I know in West Texas and I know in old country and things like that and farming that a lot of y'all's equipment is special purpose equipment. And so it's something to think about. And like I said, the banks work with a community development corporation. I have a sheet over here that the ones they're very active in West Texas, and the banks love working with them because they help put the deal together and charge a fee. Spencer, anything down there?
Yeah, Matthew, I actually participated in a 504 program in 2008 in something that he's talking about, a single purpose kind of facility that was ag based. The loans were on the 504 side were 20 years fixed rate. So it really helped you manage your cash flow. You knew what your payments were going to be. On the commercial side, the term was 15 years and it repriced every 5 years. When we got an opportunity to pay some of our debt early, the TPRDC allowed us to make accelerated payments to the commercial side and just continue to make those payments to the 504 as it had been amortized. So it's a really good program. It takes a little bit of extra time. There's more paperwork, but it's worth it if your project's the right size and the right nature.
I'd also add that the 20-year fixed rate you mentioned is typically below bank market rates as well. So that rate's also a little bit lower on that portion too. So that's a big bonus.
Yeah, I think yesterday, and it's a little bit crazy, y'all. So we do 15, 20, actually 25-year notes now on the 504. It actually goes down a little bit when you go from 20 to 25 years. So, and what reason the SBA wants it to go longer terms is because, like we talked about, we're a cash flow lender. We want you to retain some of that cash a little bit longer as you grow and build this business That way you can invest it back into the business. I would say most businesses qualify for a 504, but some don't. And so just remember, we're always looking to do small businesses that are, employee people and things like that. But for the most part, it covers it. Just going to touch base because one of our panelists wasn't here about micro lending. Micro lender may be something you definitely want to look at. We're talking about $50,000 loans and under. They're associated with a nonprofit generally, and they're willing to take a little bit more risk than your traditional lender. They are taking a lot more risk than a traditional lender. And if you're just looking for some working capital, some machinery and equipment, some inventory, just to kind of, if you're an existing business and you're like, I thought I could do this on a credit card, right? Everybody starts on a credit card. It's fine. We've all seen businesses start on a credit card, succeed, do well. But sometimes it's time to go up a little higher and do a little bit different process. I don't like people to start a business on a credit card, but it's fine. It scares us. But that being said, think about micro lenders. I have a list over there. People Fund actually has a local presence here in Lubbock, but all the ones that we work with, a lot of them are online. They are willing to take the interest rates are a little bit higher for the micro lenders. Of course, they're taking a little more risk. And then the 504 was talking about, I think it's 6.5 for a 20 and a 6.28 yesterday on a 25.
Yeah.
Yeah. And so you won't hear those rates anywhere on a construction loan or on a new project. But the bank on the front end will have a little bit higher rate than that. But overall, you're probably not going to get a better rate for buying a structure. And so let's talk a little bit about in the business plan. And I keep saying the word cash flow. You want to talk a little about, Spencer, what cash flow means in a way? I mean, it's simple, but it's not.
Yeah. Many times folks who come in and talk to me and have never started a business think that you can just go to the bank and borrow whatever it's going to cost you to buy the equipment, your furniture, fixtures, inventory, and put an open sign and start your business. The problem is, depending on the nature of your business, some of you are going to have clients and customers who you're extending credit to and things of that nature. So you're not going to collect your income immediately. So you need a source of funds to finance your utility bills, your rent, things of that nature on a monthly basis until the cash flow is significant enough to basically feed the business month in and month out. So one of the things that we do at Leading Edge is help you not only understand how much money you're going to need in the form of a term loan to put all those things in place, but also what it's going to cost you on a monthly basis for some given period of time based on a set of assumptions that we work on together that tell us, okay, we need $25,000 line of credit in order to get ourselves into the 6th month where we think we're going to be cash flow positive. So those are really, really important things to do. It's one of the things that gets overlooked all the time in startup businesses. And I would encourage you to give a lot of consideration to the operating expenses. Many businesses are cyclical in nature. Maybe you have a business, you're selling ice cream, and the summer's really great, but as you get into Thanksgiving and Christmas, people stop buying as much ice cream. So you still have your fixed cost that you're having to make, and so you may need a little bit of money to help bridge that gap to get you back into the spring. So again, cash flow is really, really important, and it's one of the things that we focus on intently when we help you put together your financial pro forma.
And just to go a little bit into that, so if you're a business owner, you don't want to be in the red, right? You want to be in the black, right? But we all have to start out in the red. That's just the way it goes. Kevin and Kim, you've probably seen this. Someone come in there and show you a business plan, it starts out in the black. They show they're making money on day one. I don't know if a business that starts day one, but so that's where Spencer and things like that can work in cash flow. You're going to come in and present him with the business plan and your financials that's going to show you making money first month, and you're going to be good, and you're going to pay all your bills. That's not going to happen, right? Like, if it does, it's a unicorn, and it does happen, but you don't see it very much. And I'm sure, Kim, over your years, you've seen people walk in and give you financials, how they're going to make all this money right out the gate. And how do you approve those right away, right?
Not normally. And that's one of the reasons it's really important if you're starting a new business to see the big picture. What do you have individually, and how can you support that loan until the business does start cash flowing? So
Right.
we want to see the whole.
Yeah. Because like Spencer was saying, though, just know your first month, all your bills will show up at your mailbox on time or early. All your payments and money coming in from your customers will come in late.
Yes.
So that could be a big problem. You see businesses starting off and they're like, why'd they close already? Like, well, guess what? They had more bills for the first 60 days than they had revenue flowing in. Now, they might have had sales, but cash in your drawers is a different thing. So just know when you're doing business plans, especially for startups, even existing businesses, you'll see come in there and say, hey, I want to borrow, $500,000. We're doing great. We can pay that back. It's no problem. And then all of a sudden you look at the books and you're like, well, right now you're running behind. You haven't made any money. Oh, yeah, but they're going to pay down the road. Well, they want to make sure they're going to get paid now, and so they have to answer to a board as well, and so doing that, remember writing a business plan that you're going to tell the story, and I'll let you talk a little bit about that, Kim, like making sense. Talk about a commercial loan has to make sense when you're looking at the whole package.
It does, and the American dream for a lot of people is to own their own business, and they sit around and dream till they nail that coffee shop that they want to open. Yeah. And you either have to do a lot of research and become familiar with what it is that you're wanting to do, and does it make sense, and if you have no experience, how are you going to operate that business if you know nothing about it? Some people, it may be that their family had a business similar and you worked in it all the time and you know how the business runs. And you have a dream to do something a little bit different, but you've stopped and thought about every step of the way and how you're going to handle that situation, to learn about the business, learn how to get the customers that you need to substantiate that business. And we just, we're going to ask you questions. Have you thought about this? Have you thought about that? And try to get the plan that seems like will work the best for you. And sometimes it's a no.
Yeah, and sometimes a no is not a bad thing, right?
That's true.
And maybe that you need to go back to the drawing table, right? And if I go in there and see Kevin and bring him a business plan that's showing I'm going to make money at selling shoes, I can tell him all day long, this is why we need shoes. Pampa's short on shoe stores, all this stuff. His first question is going to be in my business plan. It's going to talk about how I'm going to sell the shoes and make all this money. What do you know about shoes and selling shoes or retail business, Matt? Nothing. So you want to start out today selling shoes and you've never sold shoes in your life. And I'm like, yep. And we get that, and that's the thing. Industry experience is what Spencer can help you include in your business plan that's going to make sense to Kevin and Kim when they're looking at these loans. If I don't mention anything where I sold shoes 10 years while I was going through college and law school, Kevin's never going to know that. He's not going to ask me, maybe, because he ain't got time. He's flowing through this flow chart, and he's like, Kevin's going to be like, this dude don't know anything about shoes or retail. And I'm like, I didn't put in there, I worked 10 years selling shoes, and I was the assistant manager, and I ordered shoes, bought shoes, purchased shoes. Now it makes sense. That's what's going to be in that business plan, your industry experience. Or maybe I didn't even sell shoes. Maybe I was in a retail business selling whatever, pottery. But at least Kevin knows that I've sat in a store and I've ordered inventory. I know that how it works when it comes in, how to set pricing, all those things, In your idea, it's not bad. No idea is bad, but it's got to be administered where it makes money, right? Because SBA, we don't do nonprofits. Unfortunately, we don't loan money to nonprofits, or nor do banks most of the time, unless it's there to make money, right? And so we do disaster loans. I'll go ahead and give a plug into that. That is where we do nonprofits. If your nonprofit got hit by a fire or a storm in recent years and we had a federal declaration, we do direct lending to nonprofits. So every time I say we don't do loans to nonprofits, there's always a nonprofit in the room. It's like, well, I got an SBA loan, but it was a disaster loan. But industry experience, I say you can't have enough of that, can you? So no. So when we say it's got to make sense, it's got to make sense in making money. It's got to make sense for you operating it, and it may be bringing in somebody that knows how to do it, right? Like if I'm going to open a restaurant, I'm probably going to go bring in somebody that knows how to cook, right? Because I'm not good at cooking, or I never have done it That's another thing we see. If you've never done it commercially versus you've done it at your house, it's two different things, right? I had a lady in Lubbock, and she ended up opening a bakery because she could bake really good, and her friends and family said and she opened it. And then she comes to us, it's already open and running, and she goes, "What do I do with my business?" And I'm like, "What do you mean, what do you do with your business?" "I'm tired of baking the same 10 pies 4,122 times. Can I sell it?" I said, "Well, good luck. Everybody wants to open a bakery, but you got to find somebody with industry experience that's worked in retail, not just baking, to do it." And something else you can help with your business plan is, so let's say I go out and hire Brian because he knows how to cook really well and he's worked in the industry for a long, long time. And I hire him to run my restaurant, and I put that in my business plan. Brian's gonna come work in the restaurant with me and all that stuff. You think that's a good idea? No, because Brian can leave, right? They're gonna look at the business plan and be like, all right, if Brian leaves, what are you gonna do, Matt? I'll find somebody else. Well, that's not that easy, right? That's where you might think about bringing in somebody, give 25% to Brian, that way he's tied into the business. Any thoughts on that?
No, I just say, a real challenge for, Kim and I and Spencer, we're not experts at running a coffee shop or running a filter system or whatever. I mean, whatever the business is. We really have to really understand, where you're coming from with your business plan, and, we really got to dig deep sometimes to understand the business, basically. We don't always know that up front,
No, it's tough. Like you said, we know numbers. We know what underwriters are looking at to say yes to, but to get that information from you, that's the importance of the business plan, your idea. And then I'm gonna bump this over to you, understanding the importance of how much you need to borrow. One of y'all want to jump on that?
It's extremely important, but very difficult to actually know. So one of the things that I tell people when we get started, I say, if they just walked in cold, had not done any work at all, I say, give me your Christmas list, and let's build this the way you see it in your head. And then we sit down, and I try not to do too much preaching in the beginning. I just let you tell me what you think you want to do, and then we take a look at what those numbers say. It, almost without exception, is really light on the revenue and really heavy on the expense. And it's very difficult. Most people don't have the type of mathematical brain to do all those computations in their head. When you need to get it down on paper. Once you've got it down on paper, then we can run it through its paces. We can ask hard questions. We can look at the assumptions. If you said, I'm going to start a factory making widgets and I'm going to sell 40,000 widgets a day, and you're in a town that's 20,000 people, so you're going to have to sell 2 to everybody every day, that's probably not going to work. So those are the kind of things that we do. We take a look at and rationalize the assumptions that you've made. I will spend as much time as you need to get there. Some folks don't like that. Some folks want to come in, want me to tell them where the money is, and then get out of their way. But I will tell you that if you do it that way, you're going to learn the hard way. I've done it that way. I did learn the hard way. I spent multiple years at different times unwinding businesses that I had started and didn't do any pre-planning. Spent time paying off debt so I could start and do it again. So,
One of the things I'll say about the way Spencer works with a potential customer is that I think you give them homework.
yes, ma'am.
He's not going to do everything for you. You have to do legwork. If you're going to be, doing improvements to the inside of the building that you're wanting to purchase, what is it that you're wanting? How much is that going to cost? Are there contractors that can do that kind of thing? It makes you really think about the process deeper than you might have before. So I think having to do your own legwork, it's guided legwork. Wouldn't you say,
Yes,
Spencer, it's guided.
Everybody's in a different spot. I tell people I'm not here to tell you what you already know. I really want to help you mitigate the risks so that you have a greater chance of success. That's going to, if we work through your business, the financial portion of your business plan in more depth, than less, then when you go to the bank, you have a better chance of convincing them that you've done the mitigation work that makes them more comfortable so that they can lend to you. There's a whole host of things you have to consider. I mean, if people are willing to do it, I talk about your personal life and the things that you've got that might take you away from your business, because a lot of folks see a business as an opportunity to free them up and give them more time. The reality is you've got a lot of freedom when you're the business owner, but you certainly aren't in control of your time. That time's gonna be dictated to you by your customers and by problems that you're having in your business. So you're not gonna work less hours, you're gonna work more.
Yeah, and also price point. That's the other thing. So we've learned through trial and error. That's how, guys, we've seen loans, they've made loans and learned through trial and error. Spencer's worked with people and he's worked his own businesses and know through trial and error. But also walking in, I've done it. Somebody walk in, I want to borrow $200,000. I'm like, okay, let me help you put this together. We work with this, we go to the bank. This is when I was young, didn't know any better myself. And they're like, what's the $200,000 for? And I'm like, well, I don't know. Well, to start a business, right? And so knowing what you need the money for is just as important to knowing how much you need and how you're going to make money doing it. And like they said, we're not trying to ever discourage somebody making a small business, right? We've got 1,000 success stories for every bad story we've got of somebody starting a business. And I can tell you people that have started with, in their back closet, and now they have probably 24 locations across West Texas operating businesses. So, no, there's hope, and there is a plus side to all this hard work. We just don't want you to start off behind the 8 ball, right? We want you to start off, succeeding coming out the gate in those first 6 months to 12 months. And so in doing that, something else we talk about, price point. In borrowing that money, you'll come in there, let's just say, we'll start with coffee shops. We've been on coffee all day. So somebody comes in there and on their business plan, they'll put, coffee, $3.25 for a cup of coffee, right? Like, why are you charging $3.25 for that cup of coffee? Well, that's what everybody charges. No, but why are you charging $3.25 for that cup of coffee? That just sounds like a good spot. How much is it costing you to make that cup of coffee? You would be surprised after we've run whatever that widget price is on your retail value, you're going to be losing money for every widget, every cup of coffee you sell. And they're like, oh, maybe I should go up. Well, if you're going up, you just now said everybody else is selling it for $3.25. So there went your market, right? What's going to make them pay that $4.50 for your cup of coffee over the $3.25? Maybe you're bringing in some special coffee that you can't get anywhere else, and you've done. But that's going to bring us back to market research, right? You're going to come in there and say, hey, I have a specialty coffee that you can get nowhere else. And I found it when I was on vacation in Guam. I'm bringing it back. Wait till everybody tries it. Everybody's going to want this coffee, right? Well, market research is going to show that no one in this area, but 1% of the people are going to want that coffee, and they already order it themselves from Guam. So it just doesn't make sense, right? It doesn't make sense. Hamburger shops. You're gonna open a hamburger shop. Well, how many competitors do you have? Everybody. Even the Mexican food restaurant, the Chinese restaurant, they all sell hamburgers, right? So market research is important. Who's your competition, right? Is it necessary? I want to open a shoe store. Well, who's my competition? Walmart's probably my biggest competitor, right? And so can I compete with Walmart with my shoes? Well, yeah, my shoes are different. Okay. But how many specialty nice shoes does somebody need for $200 in this area, right? Maybe a boot store, but probably not a high-end Italian leather shoe store, do they? So it's just thinking about that things. And I see Rick in the room talking about like furniture store. You're catering to your audience. So market research is something Spencer can help you with. There's many resources. If you're a veteran, I always forget to mention Linda over in the room with Texas Veterans Commission. Very helpful as well for business advising as well. And so I'm going to open it up to questions. Let's go with that. I want to know what y'all are thinking. We see y'all's faces, but we don't know what y'all are thinking. So, questions, anybody? Go ahead.
2 years ago, my daughter and I started down this path for small business. We wanted to open up a store in a small town, and we went to the local CDC and the SBA.
SBDC, yeah. Yeah.
And they were very helpful to get us our forms. We was going forward, but they informed us there was no financing, they were not willing to help us with financing at all. We did it on our own. We were open to store. We were breaking even. We were doing good, and a tornado struck down, wiped out half the town. And again, we were told by SBA that there was no help for us. Now, today, I'm finding out there is help for us. So I want to say thank you very much from a small business owner that I appreciate all that you're bringing forward.
Yeah.
So now we're hoping to reopen our school.
Yeah, and I'll start off with that. No promises from us, right? But at least is giving you hope. So what she's saying is 2 years ago they did go open a business. You did the business plan probably with the Small Business Development Center and opened your retail location and survived, right? And that's what most businesses actually do. They end up opening, surviving despite what some of us say that maybe is good or bad. So we're not the final word on anything, right? We know from our avenue if what we've seen, what works best, and from financing, we got to make sure it makes sense for everybody. They got to make sure it makes sense for their banks, their investors. I got to make sure it makes sense we're a steward of taxpayer money, right? It's not one of those things where we can just say, hey, go get it. We do have to make some sense. The money we're loaning out comes in from other loans, but tax dollar money as well. And so we're a federal agency, so it has to make sense to us. Sometimes when you start out, it doesn't make sense that any of us can loan money for whatever type of business it may be. And when you lose the business, unfortunately, that's another aspect. We do capital access, counseling, and we do government contracting, women-owned business certifications, federal things. But our direct lending is disaster lending. So when tornadoes or fires come through and a governor asks for federal aid and the federal thing is comes out, that's a discounted rate loan. It's directly from the SBA. There's no fees that come with it. They're great loans. But only thing about those loans are they're only going to get you back to where you were prior to the disaster. So if you had one car out there and the car was worth $2,000 and it got, let's use the fires, it burned up in the fire, unfortunately, you're probably only going to be eligible for $2,000 and you're going to have to come with the rest of the money to go replace that car, right? It's not insured, and so that's what you're going to be. Now, if there's a welder on there, all these equipment, all this specialized equipment, that would increase it, right? We could maybe go up to $50,000. That replacement value of $2,000 sometimes can fluctuate, right? You go to us and you say, hey, I can't open my business back up with, $2,000 truck. I can't even find one. That was a 1978 truck that I used for years, and it's irreplaceable, right? We all know that. You possibly could increase the loan to get a newer truck, but it's only to get you back where you were prior to disaster. So unfortunately, sometimes the disaster loan don't work out. So what we talked about is we may go traditional SBA, look at if you want to build a building, a 504 or a leasehold improvement 7A might be a better avenue. But you've been an existing business. You know the problems now. When you do your business plan and your projections, you're going to know what you're looking at. We like working with existing business because you've been in business and your numbers tell us if this is going to work or not, right? Now, if you haven't shown that you've made any money for the last 5 years, just know when we come in, we're going to say, you haven't shown you've made any money in the last 5 years. And they're going to well, I was growing my business. Okay, but you're asking us to inject more money and you're going to pay us back X, Y number of dollars. Where does that money come from? And it might make sense. You might say, listen, I bought this building on a 5-year note. I paid off that 5-year note. Now that's going to free up $4,000 a month. Now I want to get a loan for a line of credit that's going to do $2,500. Okay, that makes sense. You told us that makes sense. And in 2024, that loan fell off, and this year you're going to show a profit because now that debt fell off. But it's got to make sense. And yes, we're not always there. We not always can help in every way possible. But glad you found a resource today in the room that maybe we can help with. Yeah. Yeah, and we will all try the best we can. We want to say yes, but sometimes we can't. So, anybody else?
Yeah, this question's for Kim and Kevin. You hear that you should be building a relationship with your banker before you need money. So how do you go about doing that? Do you invite them to lunch? Do you go have a tequila shot with them after work? Walk us through that.
I'm not sure about the tequila shots, but maybe a round of golf would be good.
I'll take one.
Yeah.
No, I think, like we mentioned, everybody needs a checking account or a savings account or some type of deposit account. So it's just important, in my opinion, and Kim's, to have that money, that deposit account in the bank. We can see how you've handled the account, make sure it's not overdrawn or always insufficient or whatever. I think that's just a great way to start the relationship. And then it's just, come in, sit down, let's talk. I mean, let's talk about your business plans and your dreams and your hopes. And that's what we're there for. We're there to talk to people and to help with that avenue of financing. So.
And I think as having a relationship, when you start with the deposit, maybe you've done consumer loans for them, for a car, or you've helped them purchase a home, and they maybe have a small business, but they need to grow it. One of the things that I think is a frustration for me is when someone doesn't take care of their books. They don't have an adequate accounting system, and they'll bring you in, well, these are all my invoices for 2023. This is what I brought in. And there's no total. It's all their invoices. What did it cost you to run your business? And they have nothing that they can give to you. They can say, well, here's my check register. These are the things I paid out. But it's really important to keep track of your business, whether it's personal or your business, to track what you're doing so that you know where you're at, so that if you do need to present it to a lender, we have the big picture.
Yeah, I'd say QuickBooks is amazing for small businesses. QuickBooks will spit out income statements, balance sheets, all the stuff that we need to look at to consider financing. So.
And I'll throw this out there. I always said this when I teach Start Your Own Business classes. Ask the question why sometimes. They may not always be able to give it to you. But if you go to a bank and you present your business plan, everything looks good, and you're excited about it, and you've presented it, go ahead. Don't be afraid of the banker just because they're sitting there behind the desk. Say, why are y'all not able to do this? And it may be as simple, it's just not for our bank, which is perfectly fine. They're okay with you going somewhere else. They're not going to be upset. Now, if you're banking with them, even commercially and checking, they want to continue that relationship. They want to work with you best they can. Just on this project, they can't, which is fine. And there's other banks out there that will do it. Maybe do it. No, let's don't say do it. They'll possibly do it. Just think about, and then I talked about that coffee shop. All lenders want to diversify their portfolio, right? You don't want to have all your eggs in one basket. And so maybe they've done multiple loans for, oil pumps or trucking companies in West Texas, and you're another one showing up. They can't loan another $1 million to another trucking company. Their board of directors will be like, whoa, why do we have all this money into trucking companies? Because what if that market changes, right? If that market downflows, they're taking a big hit on their downflows on their area. But you may have a bank in Chicago that wants to do that loan, because guess what? They're hearing about all the trucking companies in West Texas going crazy, and they don't have any trucking companies. And so just know there's other resources that you might can flex with, and they're okay with that. And you may not want to do your checking and your commercial stuff with this bank that you never heard of in Chicago, but you might want to borrow $1 million from them to buy, 18 new trucks to put on the road out there. And so they're okay with that. But guess what? You got to get to know your lender. You got to get to talk to them. When you make those deposits every day, you might come in and say, hey, can I talk to a commercial banker? I got an idea. And they'll say, hey, you know what? That's a great idea. It might not be for us. You might want to look here, but that's a good idea. And if it's about it, I say, why do you think that? And just listen, That's what I say to relationships. Just
Communication.
Listen. Yeah, just listen, to what you'll have to say. And so I've learned a lot from calling them and saying, because I always get the clients that come in and they don't want to do the loan. And I'm like, well, let's reach out to the bank and see. And they're like, well, Matt, we just don't do pizza restaurants, and we don't do any restaurants. And you're like, oh, okay. And then I call them back, hey, why don't you try out so and so? They do restaurants. Oh, okay. And it works out for them. So, yeah. Question? Somebody had one over here.
So, being like a young business owner, starting out it's hard to get like an operating note, or hard to get a loan in general. How would you recommend in order to build your credit history? Like, the credit score is good, but I have banks that say we don't have enough credit history. How would you recommend in order to build that so you actually have a history with the bank in order to get the loans that you need to keep your operation running?
Do we hit this?
This is going to sound crazy, but sometimes when people don't have that credit, but they need those funds available, sometimes we say, if you could save up, say, $10,000 and put it in a certificate of deposit, that could be our collateral to a line of credit that you could access from, when you need it, while still earning money on your money, and pay a lesser interest rate to help you fluctuate. And that kind of helps you get started to see how it works and flows, and that's a possibility.
I say loaning money is a risky business, right? You got to minimize the risk. And I wouldn't say it's anything about being young. We don't care if you're 18 or 88, honestly. It doesn't make any difference. It's minimizing our risk. And so if credit's less, guess what? We want to see more injection. If credit score is lower, we want to see you're bringing more to the table. We want to know you're invested in this business as much as possible. So if your credit, for whatever reason, is not a 700 plus, because people that have a history of paying usually continue to pay. If they don't, I need to know what are you bringing to the table that's going to make me want to do the deal. If it's a $100,000 loan, I may want you to bring $40,000 to the table, just because that's going to make me feel better about this situation. So always minimize the risk. If it's a cash flow business and you're cash flowing $10,000, $20,000, $30,000 a month, you know what? Credit might not matter as much to me. You know what I'm saying? And we see that, right? Somebody's coming in and they're like, hey, I can cash flow this. And you look at their credit, and there's maybe some things that they can explain. You know, and explaining is important. That relationship we talked about is important. You know, I had some late payments from 2010 to 2015. Why? Well, I sell oil, right? And I'm in the oil pump business, and the business was not good then, right? Took back off. Now I'm killing it. Sorry about that. They're like, oh, okay, that makes sense, right? It has to make. Kim sent me a thing that says making sense, so that's the whole thing. It's kind of makes sense, the whole big picture. Credit is a part of it, and I would say for a newer person, a big part, but it's not the whole story in any means or fashion. Our time is up. I'm going to give everybody 2 minutes to just say what they feel this morning, and go ahead. Spencer?
I'll get started. Just want to invite any of you who are members of the Pampa community or live in the county to come see me. I'm here on Thursdays. Also, if you're in any of the other communities that we serve, please feel free to come see us. We want to help you. On the table back there where Teresa is, the Pampa EDC table, are a set of my business cards, so grab one of those on your way out.
Well, thank you guys for coming out. I really appreciate y'all. Thank you all for giving us time up here to talk. And no idea is a bad idea, right? So we can always bring ideas to the bank and talk to them. That's where Spencer comes in for us on these new business startups. So it's a team effort. So come down and see us at any time. So thank you guys for coming today.
And one thing I would say about a locally owned community bank, we have branches in other towns, Amarillo, Hereford, Perryton. One of the things that we are blessed by is that we have lenders that have expertise in all areas. And if I don't know something about what you're wanting to do, I probably have a resource within my company, and we call and talk about deals all the time. This is what I'd like to do. I don't know how to make this work. Do you have any thoughts? So we have tremendous resources within our company, and we get creative sometimes, and sometimes what you want to do morphs into something different, but it works for you. So we're just blessed to have that ability, and we'd love to see you and talk to you.
Thank you all. And I'm just going to say one quick thing, just as I started with. Think local, think small, even when you're shopping, but also when you're using resource partners. Think of your local banks, think of your local resource partners. Yeah, the SBA, we're in Lubbock. You can call me anytime. I got cards, candy, come by, get it all, and call me. But my first question is always going to be, who are you talking to locally? Who are you using locally? And if that doesn't work out, it's perfectly fine. No one's upset, and we'll talk about somebody wider, regional, nationwide that maybe can help you out. So, thank y'all.